Hey everybody, it's Jonathan. We're going to be talking about options. We're going to be talking about scalping gamma. And I talk about this all the time because it's really important. The benefits to learning how to properly scalp gamma is you're drastically reducing your risk. But you're still keeping yourself in position to make a whole bunch of money. It's just for safety. So let me show you how it works. And I'll use this example in cons. Cons is a position we have. And with this, we bought the 17 straddle, and it was shared May 7th for $3. Okay? It's nice if I could spell. So if you would have bought the 17 straddle for $3, and let's say you did it one time, okay? If you did it one time, it's $300. Now the cool thing is, you can never lose more than $300, but you are risking principal. How we want you to think about this position, 17 straddle means you own the calls and you own the puts. Think of it like you're long 100 shares and short 100 shares. That's really what the position is, okay? So you're short 100 and you're long 100. Now, we're in right here as the stock moves. Let's not do anything here just because I'm trying to be fair. But again, this is not, it's not art. We're just trying to do our best. We're trying to manage money. CONN had earnings today. And if we bought the straddle at $3, today the straddle is trading at $1.60. Now, for those who come in and treat me like a trade service, they're going to say, hey, I invested $300. It's now $160. Jonathan, you're terrible. I'm going to the next guru. I'm off to the next webinar. But what I want to do is teach. So watch what we can do. Switch the color here again. Say it trades up, we do nothing. We're short 100 shares. So how about at 16? Let's buy 30 shares. Gets to 15 half. Let's buy 30 shares. Okay? Now, if we do that, we're going to have to change this because we're short 100. We bought back shares, the underlying shares, guys. We're not buying options. Now we're only short 40. Okay? We're managing our position. If it keeps going, that's cool. We're still short 40. That's a good problem to have. But if it reverses and rally, let's say it reverses and rally just like it did, and we sell our position here. We sell 60 right here, okay? So that would make these go away, and these go away, this go away, and we're back to being short 100, right? So 30, we make $1 here. That's $30, and we make $45 here. So that's 75. So now our original investment is only 225 because we've already put that money in our pocket. That's done. But as it continues to rally, let's say again, we sold 30 at 18, 30 at 19. Earnings, it gets crushed, right? So we sold 30. That would make this long 40. Getting a little messy here, but hopefully you're following along, or if not, watch back the video. And then what we can do is buy them all back, right? Buy 60. So we just make $1 and we make $2. So we just made 30, 60, 90. So now we have $135 of risk. We cannot lose more because we're locking in that money. We also have our full straddle. Okay? That's the key. We still have 10 days left. Right now, CONN is rallying. So what you can do is you could sell another 30 shares. Sell another 30 shares. If it keeps on rallying, cool. That's not a problem because we're long one call and long one put. So if it keeps on rallying, we sell 30, we're still long 70. We sell 30, we're still long 40. Let it keep rallying. If it comes back, we can buy it back. But the key, guys, and I'm always saying if you have 10 people doing a trade, you're going to have 10 different outcomes, right? Well, the person who doesn't scalp gamma invested $300 and it's now worth $160. That person's sad. The person who's trading this correctly is up money. They still have 10 days. Who knows what's going to happen in CONN? And they're in great position to not only be up 25%, maybe by the end of this, they're up 100% or 200% because they never touched their options. They always kept their optionality. Now, if this doesn't make sense, I encourage you to watch it a few times because it's so important. I'll also tell you, I know a lot of people have spent money on options education. If you've spent money on options education and you don't know how to do this, the person who you learn from is not really an options trader, guys. This is how you manage options. This is not something that Jonathan just teaches because it's his own secret little approach. Options are a derivative of stock. Options are stock. Stock are options. You need to trade them like that. So you're long 100, you're short 100, and then manage your positions. Okay? Hope this helped. I know it got a little messy on here, but I think you got the gist of it. Okay? Jonathan, active day trader.